Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 289 on September the 22nd, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Aurora Cannabis, Palantir Technologies, and Cameco Corporation, and we discuss three new trades on WW International, AT&T Inc, and Chewy Inc. And it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, using a combination of videos and live coaching calls. If you're ready to take your trading to the next level, send me an email to schedule a phone call. And we are also launching the Weekly Option membership group. So if you'd like more information on becoming one of the founding members, send me an email ASAP. Now, the equity markets finished the week lower. The Dow Jones Industrial Average lost 654 points week over week, closing at 33,963 points. The S&P 500 index lost 130 points, ending the week at 4,320 points. Now it's time for the topic of the week. The topic of the week is monkey see, monkey do. I'm sure most of us are familiar with this saying. It essentially has to do with copying someone or something without any thought. There are a number of people who offer copycat trading platforms. In theory, these are great because you just copy the trades of a successful trader and hopefully you'll be profitable too. That sounds easy enough. However, I actually hate when people fall for this sort of training. If you give a man a fish, you feed them for a day. If you teach a man to fish, you feed him for his lifetime. When you simply copy someone else's trades, if you make money, you did it without understanding. Those winnings are truly the other person's winnings. It doesn't build your confidence or your knowledge and experience. If you lose money, you don't gain any education because the thought process that lost money wasn't your own. If you win, you lose, and if you lose, you lose. That's a bad bet all around. If you learn how to trade and you lose money, chances are you'll learn something that might improve the likelihood of success in your next trade. When I coach students, I don't feed you trades. We discuss trades that are interesting at the moment and trades that the students are in. It's great, and then we celebrate the wins. The wins are theirs, not mine. They did it, and I'm as excited as they are. No monkey see, monkey do. I teach them how to fish. All right, let's get into the trading review from last week's trades. And this was a tougher week. We'll start off with the cover call on Aurora Cannabis. Symbol A as in Alpha, C as in Charlie, B as in Bravo. At the time, the stock was trading for 98 cents per share. I looked at buying stock and selling the October 1 call at 23 cents, hoping for a return of 25.51% in 5 weeks. Well, Aurora Cannabis stock lost 23 cents, closing at 75 cents per share on Friday. The call option we sold lost 14 cents, leaving us with a net loss of 9 cents on the week if we were to close the trade out immediately. The stock closed right at the break-even point. I would not look to adjust this stock just yet. With so little capital deployed and 4 weeks until expiration, I'm more inclined to give this stock a little bit of breathing room. And the beauty of having so little capital deployed is that the loss really isn't going to affect you or shouldn't affect you too much as long as you sized it correctly. So I'm going to give this one a little room and keep an eye on stock in the coming weeks. Next up, we have the credit spread on Palantir Technologies Inc. Symbol P as in Papa, L as in Lima, T as in Tango, R as in Romeo. At the time, the stock was trading for $15.30 per share. I looked at selling the October 15-14 put spread at 34 cents, which could give us a maximum possible loss of 66 cents per spread. Well, shares of Palantir fell $1.17, ending the week at $14.13 per share. The out-of-the-money put spread that we sold is now mostly in the money. The stock is below our break-even point, which would typically be a no-brainer to exit or at least modify this trade. You could sell a call spread against this and make up for the loss on the week by turning this into an iron condor. However, there's still 4 weeks for this stock to move higher. I'm not bearish on this just yet, so I'm more inclined to be patient. I'm willing to give this trade another week before I either mitigate it by buying a put spread around it and or selling a call spread with higher strikes. Let's see how things look on Monday and Friday of next week. Finally, we have the debit spread on Cameco Corporation, symbol C as in Charlie, C as in Charlie, J as in Juliet. At the time, the stock was trading for $40.30 per share. I looked at buying the October 39.40 call spread for 63 cents, which could give us a maximum gain of 37 cents, or that would be a 58.73% return in 5 weeks. Well, shares of Cameco lost 32 cents, ending the week at $39.98 per share. The in-the-money call spread we bought is still mostly in the money. Even though you would lose 12 cents if you exited the spread right now, it still has 98 cents of intrinsic value. Like the other trades from this week, I'm willing to give this trade a little breathing room. We're still above the break-even point, so no adjustments are needed. I plan to keep an eye on the share price over the next 4 weeks, just in case I need to play defense. So that's it for the trade review from last week. Of course, today, Friday, September 22nd, is expiration for all monthly options for the month of September. The new trades for the show will use the October 22nd expiration date for monthly options in October. So let's get into the new trades. We'll start with the covered call on WW International, symbol W as in whiskey, W as in whiskey. The stock ended the week at $9.98 per share. I'm looking at buying stock and selling the October 10-half call at 85 cents, which could give us a return of 13.73% in 4 weeks. Now you enter this trade by buying stock for $9.98 and selling the October 10-half call at 85 cents. This trade makes the most money if stock prices finish above $10.50 per share. The break-even price is $9.13 per share, and in real terms, the stock purchase would require $998 and you would collect $85 for selling the option. Next up, we have the credit spread on AT&T Inc., symbol T as in Tango. The stock ended the week at $15.13 per share. I'm looking at selling the October 15 14-half put spread at 19 cents, which could give us a maximum possible loss of 31 cents per spread. Now you enter this trade by selling the October 15 put at 49 cents and concurrently buying the October 14 half put for 30 cents. This is a credit spread because we're selling the spread, and this trade makes the most money if stock prices expire above $15. The break-even price is $14.81 per share, and in real terms, you'll collect $19 per spread that you sell and have $31 at risk. And then our final trade on the week is a debit spread on Chewy Inc., symbol C as in Charlie, H as in Hotel, W as in Whiskey, Y as in Yankee. The stock ended the week at $18.15 per share. I'm looking at buying the October 19 18-half put spread for 33 cents, which could give us a maximum gain of 17 cents, or that's a 51.52% return in 4 weeks. Now you enter this trade by buying the October 19 put for $1.47 and concurrently selling the October 18 half put at $1.14. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire below $18.50 per share. The break-even price on this trade is $18.66 per share, and in real terms, you'll pay $33 to enter the spread, and your maximum gain is $17 per spread. So that's it for this week's show. Thank you guys so much for listening to the podcast. Thank you for all the emails I've received here recently. Very nice. I have the best fans. And also, I want to say or let you guys know that I actually recorded a video for a buddy of mine's TV show in Dallas. We recorded this video in a studio today, and I'm going to post it on the website in the videos tab for anyone that wants to see me and hear me share a little bit more about my background. It's a super short video, really just having a good time with a friend of mine who used to be a TV anchor here in Dallas. So that's it. Hope you guys have a fantastic weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.